So we have UK unemployment rate coming out of United Kingdom, and under normal circumstances, I would not be trading this report. Okay. Under normal circumstances, I would actually skip it because it's extremely low probability report. The unemployment figures are very stable figures and they don't vary as much, so we rarely get a trade out of this. But whenever it happens, maybe once a year, when the deviation is sufficient, like 0.2%, we can easily see a move in the pound by about 50 pips. So my thinking on this was that I definitely wanted to see the inflation report in an hour at 5:30 a.m. New York time. So I figured, I'm staying up anyway. Why not just do this one simply an hour earlier? So we get both opportunities. But in the future, if this report is by itself, many times I won't even trade it. Now we have quite a few things happening. We have the UK unemployment rate and we have another couple numbers coming out. However, before I continue, I wanted to lend the mic here to Rob Allen for a little bit. As you're probably using the weapon right now, and we are, as you know, we are releasing the new version of the Stinger towards the end of this week to a first test group of people, and then we should release it to the rest of the people hopefully by the end of next week if everything with the test group goes flawlessly. And Rob Allen is doing a little bit experiment today with this trade, you should not see any difference, but in case you do, he just wanted to let you know that this is just kind of a one-time test. So Rob, you can go on air for a few minutes and then talk to him about it, and then I'll continue with the trade plan.
Good evening, friends and fellow bastards. How's everyone tonight? Yeah, we're moving up to New York. About 40% of our servers are up there already. They're being installed in the racks and the firewall put together, so forth and so on. And one thing I wanted to do tonight, since this is going to be a low probability trade, is we're testing one of our high performance servers tonight. What we're doing is we're putting everybody on one server tonight, and I'm just going to see how it looks, and that gives me an idea as to how to better manage and allocate bandwidth in the future. So I don't think there'll be any cause for concern tonight, just happy trading, and we'll talk to you guys later, okay?
Okay guys, excellent. So yeah, basically we are testing a capacity of an extremely high performance a server basically, and it's underloaded by about 20%, so we loaded for about 80% capacity, so you should not experience any delays or anything in the weapons, but in case you do get a signal maybe 50 or 100 milliseconds too late or something, or whatever, just in case if the shit hits the fan, so to speak, just know that it was a one-time thing, one-time test. But again, 99%, it's not. You're probably not going to see any differences. This should work flawlessly. Anyway, let's continue about this. So you should be up with the trade plan there. And UK unemployment has stayed relatively stable. And of course, unemployment measures how many people are not employed in the economy. And it has stayed relatively stable at 5.5% in the last 5 months. We saw, well, actually, it's been like this since June of 2006. And remember, today we're actually getting unemployment for the months of March. It's a little bit behind, but basically, it stayed like that since June at 5.5%. The regular unemployment in the UK has always been under 5%. Has been about 4.7% or so 4.8%. It stayed at that level throughout 2004, 2005. And then towards the end of 2005, it became above 5%, and it's kind of been going up until middle of 2006. And then it seems like in the middle of 2006, it found its ground at about 5.5%, and since then, it basically, it's been at that level. We saw one little fluke in September when the unemployment came out at 5.6%. But other than that, it stayed the same pretty much for almost a year in a row, for 9 months in a row. So, today we have, as always, as we have every month, this unemployment rate coming out. And we have it coming out together with with few other employment indicators, such as manufacturing unit wage costs, claimant count rate, jobless claims change, average earnings, etc. But those indicators do matter somewhat when the unemployment is as expected. But if the unemployment jumps by 0.2% either direction, I think it'll be the leading mover of the market. So basically, to give you some idea about other indicators, I hope unemployment is clear to everybody. Obviously, it's a number of people that are actively looking for a job that cannot find a job. Then there is a claimant count rate, which is another indicator. It's expected to come out at 2.9%, and what that is basically how many people are claiming unemployment benefits. So it's expected that 2.9% have been claiming unemployment benefits, and it stayed for 3% for a while, but in the last 3 months, in the beginning of 2007, it dropped to 2.9%. The lower the claimant count rate, the better. The fewer the people that are claiming unemployment benefits, the better it is for the economy. Then we also have a jobless claims change, and that's expressed in thousands. So when the numbers are negative, that means that there's less and less people claiming that they're jobless. When the numbers are positive, it means more and more people claiming that they're jobless. There is also, and that's also coming out for April. So the claimant count rate and the jobless claims change is coming out for April. And we have the average earnings, and we have basically two main indicators. We have the average earnings including bonuses, and we have the average earnings excluding bonuses, and that's expressed in percentage on a year-over-year basis. And they are expecting 4.8% for the average earnings including bonuses, and 3.6% for the average earnings excluding bonuses. And of course, as you know, the inflation in the UK is about 3%. So whenever you see average earnings go up by 3%, all it is simply following the inflation market. I mean, people are not really making more money. It's simply due to inflation they end up earning more. But whenever the rate is higher than inflation, that's when you really know that the average lifestyle is increasing in value. Then basically we also have the manufacturing unit wage costs, which are pretty much useless, and we have the ILO unemployment rate. So as I said, most likely the unemployment rate will not hit our traders, but if it is, it should be a nice trade. And I'll definitely look at the other numbers, and I'll announce live to you what the other numbers are reading. And for the secret news weapon users, as I said, you're pretty much at my mercy right now to announce you the actual numbers and stuff. But when the new stinger is released, and it's only a matter of days until that happens, you'll be able to see all the indicators and all the numbers, popping in, including revisions. So you'll be able to see everything very quickly and make proper decisions even on your own if you like. Having the new version of the stinger will decrease the